Ashley, good morning. How are you?
Good morning. Everyone's healthy and happy over here, so can't complain. How
I
are you?
know that's the most important thing. Hey, I just want to say thank you so much for hopping on a call with me. Um, there's a lot going on in the world today, and not only in like our daily lives and in the real estate side, but I'm sure you have tons of stuff going on the real estate world, correct?
In the lending world, yes.
Yeah. I mean, in the lending world, yeah.
Yeah, it seems like guidelines are kind of changing daily over here.
Yeah. So what are these new guidelines? Tell me more about that.
It really just depends on, the specific types of loan programs. So, for example, a lot of people have questions on down payment assistance programs. Those were something that were really popular. Um, a lot of people were taking advantage of a lot of those, you know, programs that will help you get into a house with very little out of your pocket.
So
And
so let me just ask you this. So before, what were the guidelines and what are the guidelines now?
so the most popular one that everybody knew and was utilizing a lot was the CalHFA program.
Okay.
And CalHFA is still around. They're still doing loans, and they have not changed their credit score requirements. So they are still, for FHA, they're still a 660 minimum credit score, and on the conventional side, a 680.
Okay, 660 and 680. Okay,
Mhm.
so for those of the people that don't know what CalHFA is, can you like briefly explain what that is?
Yeah, so CalHFA is a program where when you buy a home, you have a down payment. So CalHFA will take that down payment and move it to a second lien against your house.
Okay.
So the first mortgage that you make your payments on is on a lower amount because it's showing that you already put that down payment.
Okay.
But you don't have to physically come in with that out of your pocket because
Okay.
it's attached as a second. They'll also help you with closing costs, and there's no payments that you have to make on the second or third. And when you either refinance or sell the house down the line, those just get included in your payoff.
Okay, that makes sense. That makes sense. Okay. So
So
that is still an option.
it is still an option. There's a lot of lenders out there that have suspended doing that type of financing right now. So we're kind of limited, but we are one at San Joaquin Valley Mortgage that can still do the CalHFA. In addition to that, there's a lot of people that are in the 640 credit score range. So if you have a 640 credit score, you can still do a down payment assistance program. And that one is called the Platinum. Now,
Okay.
the difference between the first one I talked about and the Platinum is you only need a 640 credit score. And after 3 years of living in the house, that loan is forgivable, or that lien is forgivable. So it goes away. You don't have to repay it.
So just 3 years, I live in the house and the lien disappears.
Right. And you only need a 640 credit score for that one.
Okay. I like that. That's a
Yeah.
good little option.
It's a little bit of good news in a time where a lot of the guidelines are just getting more strict and more strict as we go along. And
Yeah.
that is still a good one to for people to know about.
So have the what about other regular loans that people don't qualify for CalHFA or don't want CalHFA? What options do they have? I mean, do they have to come in? Because I'm hearing rumors like 700 credit score is a must, 20% down payment is a must. I was on the phone with the client yesterday, and he was just telling me, no one's gonna want to buy my house. They have to come in with so much money down, and they have to have so much credit score. So what's the truth and what's the myth behind that?
Gotcha. So it really depends on each individual's financial package, how strong they are. Do they have assets in retirement to show that, they're able to save, all of that. But to tell you in a nutshell, like just the bottom line, we look right now when it comes to credit scores. So that's kind of the biggest change when you're looking at FHA and conventional financing right now, and even VA. So the government loans, FHA and VA, if you are a 680 and above credit score, you're going to be fine. Everything is, pretty much the same. You don't have reserve requirements. You don't have a higher down payment, none of that. If you are below the 680, and we'll even take that down a little bit. Let's call it 660. If you're a 660 or below, you're
Okay.
going to have tighter restrictions on qualifying right now, meaning you're going to have to show that you have assets. You can't drain the bank and buy right now.
Okay. So like would you say like a rule of thumb, maybe a 3 month of reserve or even a 6 month of reserve?
Yeah, I would say 2 to 3 months is good.
Okay.
And then also keep in mind too, you know, if you do fall in that category where you have a little bit of a lower credit score, you're going to expect to see a little bit of a higher interest rate. So everything on the news is blasting about lower interest rates. And if you fall in that category of a lower credit score, you're going to see that that interest rate is going to be a little bit higher than what you had probably expected.
Are you, I know interest rates are very always fluctuating. Are you able to define higher interest rate? Like how high are we talking and uh, in your opinion?
Yeah, I mean, for example, I have somebody right now that is in I actually got them approved and they're at they were about a 614 credit score. So
Okay.
that's even below, the 620 that we're normal to. And I
Okay.
have them approved, but they came in at I think they were a 4.875%. So you can see that it's in the high fours, teetering the 5%, which if we're being honest, look at 2017. That's what all of the
Yeah,
interest at that time.
absolutely.
And you can always refinance at a later date when you've increased that credit score and you want to call in, you can call in and we can get you refinanced.
Okay. So, speaking of refinance, what is I actually wrote this down. Um, how much of a difference on a rate there should be for it makes sense to get a refi done?
They typically say about a 1%. If you can save 1% on your interest rate, you want to definitely look into it.
Okay.
Uh, but you need to pay attention to fees. Refinances don't come free. It's not, there's a cost associated with doing a refinance.
Okay.
So as long as you know that up front and you come in and you think, based on where you are, what you can save monthly, there's a couple things to consider. Are you going to save on your interest rate? Are you able to drop your PMI, your mortgage insurance, because you now have a higher, or you owe less than when you purchased, and it might be below that 80% loan to value where you can now drop the mortgage insurance.
And that leads me to another question, the PMI, right? A lot of people have PMIs on their loan. Is there any new guidelines or is there anything happening where the mortgage companies are taking off that PMI to help out the consumer? Or is that still like,
No,
even they've had the mortgage for X number of years?
no. So anytime you're putting less than 20% down on a purchase or a refinance, you're going to have mortgage insurance that comes into play.
So the
There's,
only way to get rid of it is getting a refinance,
Mhm.
or what's the other option?
So we have a single pay option. So a lot of times people think that paying monthly is the only option on your PMI. So
Okay.
we have a single pay where, if you've got money saved up and you just want to buy it out, you can buy the whole premium out where you don't have to pay anything monthly and it doesn't affect your interest rate when you do that.
Okay. That makes sense. Got it. And one of the things, last week I ran across a scenario where I was talking to a client and he says, Alex, my score on Credit Karma is 722,
Uh-huh.
right? And they ran the app and their score was like 615.
Uh-huh.
Right? So can you explain for the audience, like, why is there such a big lag between these numbers?
So Credit Karma is it's a guesstimate. So that's the reason why you can check Credit Karma multiple times throughout the day, and it's not a hard inquiry on there. It's not your true credit scores. So they're taking all of the information that you have and all your credit and debt, and they're making a guesstimate as to what your scores are. It is not an accurate reading. So
So it's
unless
like,
you actual, hard inquiry or you contact the credit bureaus to get their actual scores, then you won't have a true score.
so it's almost like the Zillow value of your home, where it's just a guesstimate. Okay. All right.
Yes.
I like that. I like that. Okay.
So
So
I actually have a question for you.
yeah, we'll sit down.
So I have, when you're doing loans and stuff, there's a lot of real estate questions that people end up asking. And
Sure.
one of them is, where is the market right now with the pandemic? And do we see values going down? Do we see values holding steady? Where are we right now?
Honestly, I see value being hold steady right now. Honestly, I am looking at the 24-hour market watch. 25 homes closed escrow. Okay. So that means 25 keys were handed over to new buyers and new sellers, right? 35 home went into escrow within the last 24 hours, which is a big number,
Mhm.
right? And then only 39 new homes hit the market within the last 24 hours. So everything that's coming in is going out. So
Mm.
the demand is still there, and there's still transactions happening day in, day out, and people are still buying.
I think that's important for people to hear is
Yeah.
that, in the middle of everything going on, real estate's still happening. Like transactions are still happening. And don't be scared. You're still going to get your top dollar. You're still going to be able to get a loan. People
Yeah.
think you can't get a loan and that you can't sell real estate right now, and that's not the case.
No, it's not. And you're right. I was under the same impression the first week this happened. I was like, that's it. It's dead in the water, no transactions. And I just put everything on hold. And then rethinking and reevaluating. My phone is still ringing. I picked up a couple new clients today, have few appointments set up, and we're doing this whole virtual thing, right? We're doing a Zoom call and we're going over the process and going over numbers and just having a one-on-one and finding out what's the best thing for them right now, right? And at the end, we're just making sure everybody's safe. So health is the most important thing. So, what that leads me to, how are you changing and how are you adapting to your new clients? How can people get a hold of you and what can be done?
We're doing the same thing. So, I mean, I am at home right now, but we have Zoom meetings that we set up where I can, talk with a client face to face and take an application with them and communicate with them.
Okay.
Uh, all of our documents are sent on a secured server. So when I'm asking a client to send me, your W-2s and your personal financials, those are being sent to the office. It's not something that's coming home with us. I mean, we've done everything to ensure that we can help you out. You can choose an online application,
Okay.
or email. We can come down to the office and meet if we need to. If that's just the way the consumer is the most comfortable, because we are an essential business.
Okay.
So yeah, I mean, we're still doing loans. Regardless of what you guys see on the media and everything, it's still
Yeah.
happening. And there's still really great interest rates. If you're going
Yeah.
to refinance, if you're going to purchase,
Yeah.
uh, it's a great, great market right now for any
Yeah.
buyer to take advantage of.
Yeah, absolutely. I mean, and I'm seeing a lot more vacant homes. So, there's if the house is vacant, just, put on your gloves, your mask, keep your distance, and we can go show these homes, or we can do a virtual walkthrough. Whatever is your best option works for you, right? Um, and is there anything else a buyer should keep in mind, or what can they do to bring up their credit score so they can get a lower or a better interest rate? What do you
I would
think?
say call me, honestly,
Call. Yeah.
because when you call me, I'm someone that's going to look at your credit, and based on the experience, I'm going to say, what collection accounts do you have? How can we help with those? Can we settle them? Can we dispute them? Like, what is it that we can do? Or do you have very new credit where you just need seasoned credit?
Mhm.
What is an authorized user? An authorized user is something where you can, ask a family member to add you onto their card and kind of help give you a little bump in your credit score to get you where you need to be.
Right.
So there's a lot of things that we can do to help people with their credit scores or give them the advice to get on that path. But we're not going to get there if we don't call. So don't be afraid. Don't think that, oh, I have a low credit score, this is going to be a waste of time. Most of the people that call me and they have a lower credit score feel relieved because they actually have an outlined path and detail of where they need to get or what they need to do so that they can buy a house instead of constantly being disappointed every time they come in.
So you're like basically setting up a plan, like a journey, right? Step one, this is what you have to do. Step two, we'll do this, and step three will result in that. Okay.
Absolutely. Yeah.
I like that. I like that. Fair enough. Okay. How's everything else? Everything's good with the family?
Everyone's good. Everyone's healthy. Things,
Awesome.
the schools are amazing. They got everything online. So
Yeah.
it makes it simplifies life a little bit.
Right. So are the kids doing the homework? That's the bigger question.
Yes, they are.
Oh man, they're being good. They're behaving. That's no fun.
I didn't say they were behaving.
Oh, okay. I'll back up. Fair enough. Well, hey, Ashley, thank you so much once again. If somebody wants to get a hold of you, what's the best way? What is your phone number? And of course, I'll have it in the description. But if you just want to share that with us.
Sure. So I'm Ashley Weaver. I'm local here with San Joaquin Valley Mortgage. And my cell phone, you can call or text me, is 661-809-6508. And you can also email me at aweaver@carpi.com.
Fair enough. Awesome. Well, hey, thank you once again. I hope you enjoy the rest of your day, and we'll talk soon.
Okay, see ya.
Bye.